So what I think is happening here is that Jay Powell and his cohorts at other central banks, they think that by driving down asset prices, they will slow down the economy. And they probably will, because this economy is built on credit and the wealth effect on stock market wealth, on not on real production. And that's the big mistake they're doing, or they're making. They don't realize that to kill off inflation, you have to raise the Fed funds rate above the rate of growth of prices. So with CPI running at almost double digits, the Fed funds rate really should be at least 10%. And until they do that, the inflation is going to continue. Friday, July 1st, 2022, Maneco 64, home of alternative economics and contrarian views. So today we're going to look at the Federal Reserve, and specifically Jay Powell, and the fact that he doesn't know what inflation is. Yes, he might be like trying to fool the public, but I'm quite convinced he doesn't. And that's why you need to be concerned. That's why you need to run for the hills, so to speak, monetarily, in my opinion. And we're going to look at that today, and some recent comments he made, and also some comments he made last year prior to prices taking off. Of course, we're going to go over what inflation really is, give Mr. Powell a lesson on inflation, and hopefully other central bankers will listen to us, right? Before I start, I like to say that some of you like this new setup. It's not really a new setup. I'm using the microphone that I usually use for my live stream on Sunday. And some of you think that this setup is better. I can tell you the image. Some of you like it, but it's not as high definition as my usual videos. I've been using my iPhone really to record my videos. iPhone, I think it's an iPhone 11, and it's in HD. So the quality is better, but I can't use that microphone with this. I use another microphone, which is probably not as good as this one. So let me know if you like this new setup, if the quality of the picture is good enough for you, then I'll stay with this setup. And of course, I use also Zoom here and my camera from my laptop actually to do this recording now. So just wanted to let you know that. So before we go on to Powell, just wanted to recommend another book. A lot of you already know about this book, but it is called The Pocketbook of Gold, A Survival Manual for Monetary Mayhem by James Sinclair and Peter Carlin. So there you go. And they wrote this around 2010, I would say, just after the 2008 crisis. And it's a good thing to go through this, especially when things are so like topsy-turvy, I would say, in terms of markets, in terms of precious metals. I'm sure there's a lot of people out there who are discouraged. But if you go through this book, you know, you will understand what's going on and what gold and silver are really. That gold and silver are money outside the system. And that when we are in such a environment that we're in, it's more important than ever to have, well, it's up to the individual. Some people would like to have all their monetary savings in gold and silver. Some think that 5 or 10% is okay. And that's for you to decide. But I think it's imperative that you have some. And Jim Sinclair in the Pocketbook of Gold notes that eventually what gold will do, and silver to some extent, well, to a big extent as well, is to reveal wealth, what real wealth is. And right now we've had 40 years of mythical wealth being built, as Mr. Putin would call it, or funny money wealth, and it's all unraveling. Yes, paper gold and paper silver are getting thrown out of the bathwater. The baby is getting thrown out of the bathwater right now. But believe me, when the dust settles and when the current fiat currency system or the dollar system, whatever you want to call it is down the tubes, you will want to have some physical gold and silver. You will be in a powerful position. There's an old saying about he who has the gold makes the rules, right? And what better way to try to help you understand this than to talk about how clueless Jay Powell, the chairman of the board of the Federal Reserve System, which is the central bank of the United States. It used to be the bank that ran the monetary system, but now, ever since August 15th, 1971, the Federal Reserve doesn't run a monetary system. It's been running a I owe you nothings currency system, because prior to 71, there was money in the system. Foreign countries could redeem their dollar reserves, currency reserves for real money, i.e. gold, at $35 per troy ounce, of course. So it's even wrong to say that we have, I would say technically, monetary mayhem. I guess the mayhem here is that there is no money and we have currency mayhem. So before I play a clip of Jay Powell answering a question last year in a virtual testimony to Congress about sound money and inflation and M2, and that was, I think, April last year, so over a year ago, I want to reinforce the definition or the nature of inflation. I know many of you have listened to this before, but recently we've gotten quite a few new subscribers, which is a good thing. So this is from the memoirs of Felix Sommeray, and I highly recommend, if you're into reading, to read this book. I'll put a link to it below in the description. It's a free PDF. The physical book is very expensive, I think, to get. So you might just want to stick to the PDF. But this is what he said about inflation. And this was one of the most influential bankers of the first half of the 20th century. The state alone is responsible for inflation. Inflation without government, or indeed against government, is impossible. So the other thing I would say is that inflation, the definition of inflation, has been kind of twisted. Like a lot of things have been twisted, not just in finance these days, but also throughout society. The traditional definition of inflation is when you inflated the money or credit out of thin air, when you created too much money and currency not backed by enough gold or silver, and that resulted in the dilution of the currency. Dilution of the currency is just like issuing too many shares of a company. It becomes worth less versus everything else, and that's why prices go up. Nowadays, though, even the PhD economists, even Jay Powell, who we're going to listen to in a minute, they define inflation as the CPI or the PCE, which is actually the consequence of inflation. And that's why I think they're clueless, and you have to really batten down the hatches, because things are not going to get better. So now let's listen to this clip of Fed Chair Jerome Powell says money printing doesn't lead to Kitco says inflation. I say higher prices. So you see, even Kitco has been fooled. So let's listen to it.
What would you say constitutes sound money?
Well, the public has confidence in the currency, which they do, which the world does. That's really what it comes down to, that people believe that the United States currency is perfectly reliable and stable in value.
Okay, so as a store of value, it clearly isn't stable in value. It is not. But as a store of value, the U.S. dollar really, is it diluted as a store of value when M2 goes up by more than 25% in 1 year? Does that does the printing of more US dollars somehow diminish the value of the dollars that others hold?
You know, there was a time when monetary aggregates were important determinants of inflation, and that has not been the case for a long time. So you'll see if you look back, the correlation between movements in different aggregates, you mentioned M2, and inflation is just very, very low. And you see that now where inflation is at 1.4% for this year.
So there you go. This was in February last year, February 2021. So Mr. Powell was clueless about what's going on. And recently he was at an ECB Forum. I think it was last week or earlier this week. And this is what he said. We now understand better how little we understand about inflation. So there's another clip from this ECB forum that I was able to find. And of course, it's from Bloomberg Markets and Finance, not from Maneco 64, not from George Gammon, not from Wall Street Silver, right? If you search Fed on YouTube, all you get is Bloomberg and CNN and CNBC. It's truly sickening. But anyway, listen to this clip as well. So the reason why I want you to listen to this clip is because it shows more and more that he has no clue about what inflation is. He seems to be blaming economic growth for inflation, and that's why he's not going to kill inflation, nor will any of the other central banks, because if you had true economic growth, you would actually have deflation, or you would have lower prices because more people would be working, more people would be earning real sound money, more people would be producing products, and you wouldn't have inflation. So he doesn't understand that the reason why there is inflation or rising prices is because he's created all that currency, right? Which the congressman last year asked about, and he negated. He said, "Oh, M2 doesn't matter anymore," even though it does, right? And that's why I'm saying you need to really run for the hills. So let's listen to this clip here now.
Paul Krugman, I think on Friday, said that the number one risk to the U.S. economy is that the Fed could overdo it because inflation could come down as quickly as it went up. Is that really possible?
Well, we'd certainly welcome inflation coming down more quickly than expected, and we would take that into account in our policy. So look, as I mentioned earlier, we're very strongly committed to using our tools to get inflation to come down. The way to do that is to slow down growth, ideally keep it positive, and as I mentioned, supply and demand get back into balance. So that's what we're trying to accomplish.
So there you go. I think it's pretty clear that the Fed and other central banks are basically ignorant, behind the curve. They've got the wrong diagnosis, they've got the wrong cures, and that's why rising prices are going to continue, because they're not going to kill off the inflation, because they don't know what inflation is. They want to have their cake and eat it. Some people might say this is on purpose. I don't think so, because these people, the economics class and the central banking, Wall Street, City of London, like clique, they've been brainwashed for 40 years to think like this. So with that, let's look at where the markets are this morning. Before we do that, we're going to look at some year-to-date performances for different asset classes. Yes, I saw there's a lot of headlines about the stock market having its worst first 6 months since 1970. And it's not surprising, of course. So the Dow was down 15.3% year-to-date, S&P 20.58% year-to-date. NASDAQ down almost 30% year to date. So we're going to continue here. We're going to look at the commodities, Invesco Bloomberg Commodity Index. Well, it was up 16.26% year to date. So yes, it has come off quite a bit from the highs early this year, but it's still up on the year. I'm going to look at the medium term Treasury ETF. That's 3 to 7 year Treasury ETF. And why are we going to look at that? Well, because foreign central banks, foreign investors, they hold a lot of treasuries because they think the dollar is as good as gold still, or that the dollar is a safe haven asset, right? So, and for those who think the dollar is not collapsing, just look at this ETF. Well, it's down 6.86% year to date. So I think it's probably one of the worst performances as well in the last 50 years for bonds. And if you go further out in terms of maturity or duration, and you look at the TLT, that was down 20% year to date. So yes, the dollar index is up year to date about just under 10%. But if you look at GLD, which is an ETF for gold, and I'm looking at that because it's easier to get a settlement, I still believe physical is the only way to go, of course. Well, it says here that we are basically unchanged year to date. So gold did nothing against the dollar, and the dollar did nothing against gold. So what I'm trying to say here is that the dollar index, the only reason it looks good is because the other fiat currencies are a derivative of the dollar. They have been since 1944, and the Bretton Woods system was set up. So that's why you get that. But the dollar eventually, when people realize that what underpins the dollar, the US Treasuries, the debt, when people realize that that's falling out of bed, they're going to get out of the dollar as well. And that's when you're going to see gold and silver, their fiat prices really go through the roof. I truly believe that. So to the markets this morning, 9:09 a.m. London time. So yeah, we've got spot gold breaking through 1800. It's at 1794, down $13. So they've really got it for the paper markets here. Silver as well, it's breaking through $20 at 1976, down 50 cents or 2.5%. Gold is down 0.75%. The Dow future is down 1% or just under 300 points. The NASDAQ 100 future is down 1% as well. And so is the S&P. So it looks like we're getting a kind of a 2008 event here, like a Lehman event or a March 2020 event, where people are getting rid of assets, selling off everything, and paper, gold and silver included. So it will be very interesting to see for how much longer the central bankers hold on to this tightening bias. We'll have to see. To the currencies, we got sterling down 0.2% at 121.01. The euro is down 1/3 at 104.44. The dollar is down 0.25% versus the yen, 135.35. And the dollar is up almost 0.5% versus the Swiss franc, just below 96. The dollar is up 0.25% versus the yuan at 671. A quick look at the Russian ruble. The dollar is down 2% versus the ruble. We're back down to around 53 versus the ruble. The dollar is, that is. To the other currencies now, we've got the Aussie dollar down 1.5%, 67.94. The dollar is up 0.5% versus the Canadian dollar, 129.36. And the Kiwi dollar is down 1.25% at 61.65. General commodities also getting hit. WTI crude down 0.5% at 104.01. Brent crude down 0.5% at 108.30. High grade copper getting hammered here, down 4% almost at 356. And US nat gas, I think it got hit quite hard yesterday, but this morning it's up 5% at 568. So what I think is happening here is that Jay Powell and his cohorts at other central banks, they think that by driving down asset prices, they will slow down the economy. And they probably will, because this economy is built on credit and the wealth effect on stock market wealth, on not on real production. And that's the big mistake they're doing, or they're making. They don't realize that to kill off inflation, you have to raise the Fed funds rate above the rate of growth of prices. So with CPI running at almost double digits, the Fed funds rate really should be at least 10%. And until they do that, the inflation is going to continue. The other thing that's going on with the Fed and the banking system, and I've seen this in some headlines and stories, is that the Fed is paying a huge amount of interest daily to the bankers just for keeping excess reserves with the Fed, and also cash through the reverse repo. They're getting like 250 million a day. So they're doing like a bailout through the back door, while my savings here in the UK that I keep for my taxes, unfortunately, that's another thing that I really am, I would say, angry about, because our taxes are going for despicable acts by the government, like financing wars and other things. I only get 0.1%, even though the bankers get 1.25% here in the UK. So there you go. So let's finish off and look at the 10-year yield, see where that is this morning. Yeah, the 10-year yield is at 3%, basically. And we started the year at 1.5. So that's a bad thing. That means that yields have doubled. That means the price of the 10-year has gone down, and that's why the TLT was down. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide, and think about subscribing to this channel if you haven't yet. So I wish you all a great day and a great weekend. And for my viewers in the US, a great 4th of July weekend. Take care. Bye.